Police Scarlight breaking news. Police Scarlight, the U.S. housing market is at a crossroads, and home buyers, investors, and sellers are all anxiously waiting for what happens next. Over the last 2 months, economic uncertainty has shaken the market, causing the 10-year Treasury yield to plummet 60 basis points from 4.8% to 4.2%. That's huge because mortgage rates follow the bond market's lead. And as a result, the 30-year fixed mortgage rate has hit a low of 6.75%, the cheapest since mid-December. House with garden chart decreasing. But don't get too excited yet. While lower mortgage rates should spark a home buying frenzy, early data suggests something very concerning. Buyer demand is still stalled. In fact, weekly pending home sales are 3% below last year, showing that buyers aren't jumping in like they normally would at this time of year. So what's really happening? Let's break it all down. Fire. Magnifying glass tilted left, mortgage rates drop. But will it matter? The big question on everyone's mind. Will lower mortgage rates trigger a real estate rebound? If history tells us anything, the market doesn't heat up until mortgage rates drop below 6%. Last year, rates fell from 7.5% to 6.5%, yet demand didn't really pick up until rates got closer to 6%. Here's the real wild card this time around. The economy is slowing down. Chart decreasing. The Atlanta Fed's GDP Now data suggests a major slowdown is already underway, which means we might see even cheaper mortgage rates. But at what cost? A slowing economy could mean higher unemployment and shrinking incomes, leaving potential homebuyers hesitant to make a move. Fearful face. For the last 3 years, job security has been strong. But if mortgage rates fall because unemployment rises, we could see fewer buyers in the market instead of more. This is a major shift, and it could spell trouble for home prices in the coming months. Bar chart housing market inventory. What's really happening? Right now, there are 639,000 single-family homes on the market, 28% more than last year. That means buyers have more choices than they did in 2024. But here's something shocking. Even though inventory is up, new listings are still historically low. That tells us one thing. Sellers aren't rushing to list their homes. Office building condo crisis. Condo and townhouse inventory is 33% higher than last year, with a staggering 36% of all condos for sale located in Florida. Some areas are seeing condo prices drop below 2024 levels, proving that not all parts of the housing market are behaving the same way. If you're thinking of buying a condo, this could be your chance. Prices in some areas are already lower than they were last year. But will prices keep falling? Let's keep watching. Eyes. Chart decreasing pending home sales. A troubling trend? As we enter spring home buying season, pending sales should be surging. This week saw the most newly pending home sales all year, but sales are still trailing 2024. In total, there were just 60,000 new pending home sales, which is 3% lower than last year. That's not a good sign. Grimacing face. With mortgage rates easing down, we should see a flood of buyers entering the market. If we don't, it means buyers are still scared, possibly due to job concerns, economic uncertainty, or the fear that home prices will drop further. Pushpin key takeaway. If pending sales don't pick up soon, it's proof that this housing market is weaker than many expect, and prices could take a major hit in the coming months. Money-back home prices. Will they fall hard? The median price for newly pending contracts just jumped to $389,900, up 1% this week, and 2.6% higher than last year. But here's where it gets interesting. While prices are rising slightly, price reductions are at their highest levels in recent Februaries. Exploding head. Right now, 33.7% of homes on the market have had price cuts, which is a major warning sign that demand is weaker than expected. Some sellers are getting desperate, and if demand doesn't improve soon, we could see prices start slipping, especially in markets that are already struggling like Florida condos. Direct hit. One shocking example. A San Francisco condo that sold for 15% more in 2015 is now struggling to find a buyer. It's been withdrawn and relisted 4 times with no success. This could be a huge red flag for overpriced markets. Astonished face. Loudspeaker final thoughts. What should you do? The housing market is in a highly volatile state right now. Mortgage rates are falling, but buyers aren't rushing in, and that could mean major price drops in the months ahead. If you're a buyer, watch closely to see if demand picks up in March. If not, waiting might get you a better deal. If you're a seller, you may need to price aggressively to move your home quickly. Loudspeaker, what do you think? Will mortgage rate cuts save the market, or are we heading for a major price crash? Drop your thoughts in the comments, and let's talk about it. Fire. Police Scarlight, don't forget to like, share, and subscribe for more breaking real estate updates. Stay ahead of the market with us. Police Scarlight.